Welcome, guys, to the fourth episode of the less scores you'll ever need for YouTube. Today, we're going to talk about institutional zones, and probably a lot of you are already wondering. Okay, so that's ready. So, what is a institutional zone? We'll have two videos of this topic. First, I'm going to talk about what it is, how do we use it. Second video will be how will we spot it and which ones are valid or not, because there's a lot of different institutional zones. You just got to pick out the right ones. Let's get going. As you can see here, I've drawn two scenarios. This one is for bullish and this one is for bearish. I'm going to remove them real quick because it's not needed yet. So what is a institutional zone? If you've been in a trading game for longer than a few minutes, you know that the big boys that make the market move, which I explained in my last video, that are the banks. So an institutional zone is basically a footprint of the bank. So what happens when the market is just moving like it's always does? You see that market moves in waves. So we have your first wave right here, second wave, third, fourth, whatever, right? So, but who does that? Because if everyone just kept buying, market just would be one straight line up. Or if we keep selling, one straight line down. So, what does this has to do with institutional zones? Institutional zones are the places or like the zones where the banks make the market push. So, for example, when banks are trying to get the market to go bullish, they buy a lot at this moment, right? So, I'm gonna circle it around. This is where the banks buy the most. So, here's the most positions of the bank. Let's say 50 mil, right? What banks do is they push up. They keep buying everywhere. So they buy everywhere, they buy everywhere, they buy everywhere, right? Then we come at a moment that banks are like, okay, we put all of our money in positions now. We're going to close a few positions with profit, let the other ones run. So what do? Let's say they close 25 mil here. So now they made 25 mil profit. So this becomes 25 mil open. So this is profits. This is pure profits now. We can ignore that. So now we only have 25 million here. That's still in the trade. What banks do, they start selling here as well. So sell, 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 sell. So the 25 million profits they just got, they pushed it in the market to sell. So what do? Because they're also in buys. But remember, they are in buys right here. So what the banks do is because they sell, let me make this red real quick so it's more noticeable. They get in with, let's say 25 mil, they sell, turn that 25 in like maybe 40, 45 million, then close here. So they close all the sales in profit. But remember, we still have 25 million open right here. So what they do, they close the sell in profits and they just close these trades in break even. So this 25 mil stays 25 mil while they made 25 and 45 mil. So let's say they made 70 mil profits while keeping 25 mil as break even. So they basically turned 25 million into 70 million. It's really that easy. So what does that have to do with institutional zones? Well, the moment market comes back to the area where the banks bought the most and they end break even, they just do the same shit over again. They buy a fuck ton of orders here, right? They create the new institutional zone. Why is it an institutional zone? Because the institutions are buying here. Then what happens? They buy, take profits. They will do this shit again. So they're gonna sell here. Sell, 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 sell. Close their orders, break even. Then they start buying like crazy again and shoot up. And the market has to move back to their point for their orders to close break even because the bank don't want to lose. They want to end up break even, which is why you guys should do break even as well. Hey, just saying. So that's a little bit how institutional zones work. And then for bearish, obviously in Forex, everything is the exact same, but I'm going to explain anyways. So you got your, so they start selling here like crazy. Sell, 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 sell. Okay, profits, buy, 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 buy. Close their sells, break even, and their buys, sell, 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 and over and over and over and over again. Why do the banks do this? Because the banks want to keep control over the market. And since they have so much and so big money, they can just freely manipulate the market how they like. So let's say we're going like really bullish and market is just doing whatever, right? We all know a shitty market when we see one. And let's say this happens. So first you got your thingy here. This is where market bought, or like the banks bought the most, right? When this happens on their live charts, you just gotta know when they're making liquidity. This is just pure liquidity right here, which we're gonna talk about in the next chapter. So don't worry. But just for you guys and for the people in the Discord right now, this is just pure liquidity. This is your zone. What they're doing is they're building up liquidity right here for market to take, create a push from that, come back into the institutional zone, which is where you guys want to enter off somewhere in this area and target this, and market will easily go to your take profit. So let's find a few examples in the market. Price action is really shitty these days. So let's go out USD 1 minute. Mostly for you guys, it's 15-minute insti zone, 15-minute. I'm going to show you guys on the 1 minute because the charts are always the same. But the institutional zones are the most effective on the 15-minute. They also work on the 5 and 1 minute. But for beginner traders, use the 15-minute. When you're an advanced trader or even a VIP student, you can check out the 1 minute. Me and Sam use a 15 ticks even. But for now, when you start learning, stick to the 15-minute zones. I'm going to show you guys on the 1 minute, but keep in mind you stick to the 15-minute zones. And right away, we have a perfect example. Look at this, guys. So we got a high, a low, and a high. We don't count this because this might be a little bit more. Well, with internal range structure, you understand, but let's just take this, for example, so it's more clear for the guys that don't really understand. As you can see, we have a institutional zone here. How do I spot a institutional zone? Well, first of all, you know it's either at a low or a high. Let's say, for example, like this, right? It's always, I'm gonna write it down, for bullish, it's the last down move for an up move. Last for bearish. So what do we mean by that? Market is going bullish, so you want to look for buys, right? Institutional bullish zones. What do we see? And how is a move valid? Right here, you can see market is moving up. So what do we look for? A up move, a strong down move. I'm sorry, down move, a strong down move before an up move. But how do you know it's an up move? When market, like this push, this is the last low. It's also a advanced entry for my advanced students here. Dachi, you would have entered right here. Just saying.
Yes.
For my students, and for you guys, it is a valid move when we break structure, right? So we have a high here, a low here, and this is your new high. So this, let's say, this push here, this red push, these two candles, caused this push to happen, which means we have a new high. But it also shows us that the banks like bought a lot here, because look what kind of push they got out of this, right? You can see, even though we're like here, you can see like this is an insane push, right? So we pushed here, which means the banks stepped in here. And this is pure manipulation. Especially when you're advanced or VIP student, you can just know this is pure manipulation. But for now, we're just talking about the zones. As you can see, the push, I'm gonna draw it out. So let's say markets is just doing its thing, right? We're doing a little bit like this. And all of a sudden you have a strong push to the downside, a strong down move. So you got your low, high, low, high, low, high, low, high, low. And out of nowhere, markets going bullish, right? So what happens is we create a break of structure and we have a strong down move which indicates to us that this is a institutional zone. And this perfectly happened right here. You can see we have a strong down move. We take a little bit of the less liquidity. So this is your lowest low, strong down move. We break the structure. We build up liquidity here. You see the market push. So what did the banks do? They made people think we're gonna keep going bullish, bullish, bullish. They shoot down to grab all of these stop losses and liquidity, come back in their institutional zone, close their orders, yeah, and now just gonna continue to keep going bullish. So now Mark's probably gonna do like this, and then around this area, banks are gonna come back, right? Do the same thing, manipulate everyone, blah, 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 blah. That's institutional zones. So now let's see if we can find a bearish zone. Should be, but market price action is so terrible lately that it's a little bit hard to find a proper zone here for you guys. Yeah, you can see it's just one here. Perfect. So let's do this. We have a high, low, and a high. This low gets taken out. So where is our last up move? You zoom in. Okay, you can take these. Well, this is basically the whole up move from here to here because it's all blue candles. So we can use that. So you can see that we have the break of structure. Market creates liquidity, shoots down, comes back within the zone, in the institutional zone, and drops down. Well, and I think if we mark this like a big zone so we can see in the high time frame, that's a really big trade. Let's check as a joke how much RR you could have gotten. Because as you can see, how do you know we'll go bearish? Right here, I can tell you right now, we have another, see, look. Last up move before we break structure. So this is your last up move, last institutional zone. We tap in. So this is institutional zone 1. It forms another institutional zone, and this is where you can take an entry. So this is not unrealistic. It is when you have a different mentor than me or Sam. But this could be a 60 RR. Right? It's not that hard, guys. It's really not that hard. And this is only with institutional zones. Imagine what we do with advanced and VIP. Anyways, so we break structure, come back, create liquidity, come back into the zone, and we just dip. And it just happens the whole time. Right here again. We break structure. This low gets taken out. This one was quick because market already came back after a few candles. Yeah, but it's still a zone. Let's see if we can find a little bit more. Right here. Let's up move. Low, high, lower, low, lower, high. Comes back in. Drops. It's really that easy. Once again, you got your institutional zone right here. Market drops. Breaks is low. Comes back. Drops like crazy. Once again, you see a really strong down move. So you know the banks are behind it. Touches it. Drops. Or, for example, you can take this one, but it already got touched here. So for me, I would take it here, but you can experiment a little bit with it. And no, for the guys, this is not an order block because an order block is some stupid thingy like this. What is an order block? People would order block. Either market is not gonna go there or it's gonna get taken out or you're lucky. Just order blocks are just terrible. Look, we got a nice few examples here. We break structure. So we take out a low, or we take out a low, we take out a low, come back into it, take out another low, less up move, come back into it, take out another low. Well, this did not get mitigated whatsoever, but That's basically it. So that's just what market does the whole time. So for your homework, if you really want to get to know this concept, just go to the market and mark out these things. Mark out these strong zones. So once again, it has to break structure and you have to have a strong pretty move for it to be valid. And it's both ways. Here, break a structure, right? And that's it for today, guys. So I'll see you guys in the next video. And thank you for watching. Also, don't forget to join our Discord. We do giveaways, live trading, blah, blah, blah. We do everything. And if you want to make some millions, you should really join us. Have a nice day.